Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. Well, what a week it was. And we sent you over a special broadcast, and to our subscribers, we sent over the ALCO meeting featuring Dr. Ed and myself, talking about banking, talking about strategy in here as we move through the roller coaster. But for those of you that saw the webcast, the question is that what was different the previous week to last week? What's different now compared to the previous week? And both of us felt that really there was no significant changes that led to the big drop in the Dow. In the same way, what we've seen, of course, is the Dow heading back up and bringing more sanity to the markets. When we look at it in terms of the stock markets, most likely this trend is going to continue in here as confidence overcomes the adversity, the fear that the whole world was going to end. Once again, people sitting there saying recession. We were sitting there saying there really is no sign of recession out there, and that we still suggest keeping your eyes on the employment inflation. And that really is the guider in terms of the overall level of interest rates. In the same way, we look at the yield curve in here, and just amazing the movement. In fact, today, touching down the 3-month bill at 0. Looking at the 2-year, that has dropped down in here, currently at 0.19 on the 2-year. 10-year declining in here, down 2% type level, but making its way, still staying right around a 229. Still the same kind of shape in the yield curve, though a little bit flatter moving out through here as all of these rates continue to compress. So once again, the thing we want to be considering is, where do we price our cost of funds in here? Looking at it, I think that you want to produce activity in here, even though these markets and where interest rates are really doesn't promote intuitively activity. But I think that you need to be coming out, especially with what could be a large refi situation. You need to be a player. And think about being a player, not only selling it back into the agencies, but also portfolioing mortgages in here to get your loan volumes up. So when we look at that, look at bringing specials that might work with your particular customers, say like a 10-year mortgage, look at a 15-year mortgage, and what I like is to set these up with bi-weekly payments. So when we look at it, how should these be priced? Well, you have to look at where the agencies are pricing paper. Once again, because these wouldn't be conforming, you have some latitude, and you also have the ability to really speed up the loan process for people. That's faster than the agency process. But with the way that interest rates look in here, the 10-year product, you might want to consider, don't laugh when I say this, a 275, and maybe in the 3-year area a 295. As we always say, you want to run this in through your asset liability model to see what type of effect this would have on the overall balance sheet. And then what you can consider doing is setting limits in terms of the volumes that you'd want to take on in here. But what we want to do is that we want to keep that loan flow going in here. We want to be able to also give our front lines things to do, even as we're lowering our overall cost of funds on the short end. And the other thing to remember as an asset, which we've talked about before, is tax-exempt securities, historically looking still very attractive, though you can see, since we were talking about this particular chain before in terms of this trend in municipals versus treasuries, is that the municipal market has improved in here over this past period of time, and within that the spreads have actually grown enormous in here with the drop in Treasuries. So another thing to continue to take a look at as a diversity of different assets that you can look at in here is definitely to take a look at the tax-exempt market and what it has to offer. But within that tax-exempt market, once again, what the regulators are looking for are independent ratings on your municipal bonds, and that is one of the things that we've been offering it at S&B, that we do municipal bond ratings that are independent from the major rating agencies. This is Jay Brew, co-chairman of Seafried & Brew. Have a great week.